There are 5 weeks left in the year, people. If you want any chance at additional tax savings, optimizing your situation as it pertains to 2025, you have 5 weeks to get your schnaz in order. Now, this video is going to be specifically for that business owner, somebody who's self-employed, but some of the concepts applicable to W-2 earners as well, especially high W-2 earners who go to a tax advisor every year and get some strategies for, the wealthy 1%. But today's focus is really just on bookkeeping. Get it done. And I just want to show you guys why it's important, what you're going to need to do between now and the end of the year. But hopefully you guys are on top of your stuff and books are already current. You have a bookkeeper and there's no catch up to be done, but just want to go through, hey, the consequences and what you're leaving on the table and how can we fix this over the next 5 weeks. This is kind of a wake-up call, but we've seen too many times clients come to us in January, February, March asking for us to help them on their last year's tax bill. And once January 1st of the new year hits, 90% of tax strategy goes out the door. So let's make sure we use this time, these last 5 weeks of the year, to put ourselves in the best situation possible. So enough of that. Hello, everyone. My name is Andrew D'Amico, CPA partner here at Ledgerly alongside Mike Abrahamian. Our pride and joy is tax strategy, asset protection strategies, as well as helping our clients build generational wealth. If any of those three things speak volumes to you, please subscribe to this channel to get some of the latest updates on the tax code, as well as some free tax game that hopefully you can apply to your situation. But enough of that. I want to go straight to the whiteboard. So listen, 5 weeks left. Why is it important to have our books caught up to this point? Well, there's a few different reasons. For one, literally the whole reason we have Ledgerly, our primary focus is tax strategy. You cannot roll out good tax strategy, sound tax strategy, if there are no numbers to go off of. If you go to an advisor and you say, yeah, I think I made about, through 10 months, probably about like $50,000 in net income. Okay, like $50,000. Do you know how many times we've had somebody tell us one number and then it's twice that or half that? Nothing against you business owners, but a lot of times what you think is your net income is not what your tax return is going to show once you hire a professional to go in and clean your books. So we don't want to deal with ideas. We don't know actual numbers, because then it would be a disservice to both yourself and us if we're giving you strategy based on faulty numbers. We might say, hey, if you're over 50,000, hey, let's maybe talk about S Corp. But if you said $50,000 and you really only made 25, then okay, S Corp probably doesn't make sense. We don't know that until we have accurate data. So it's important to have accurate data so you can get accurate tax strategy. So that's really number one. And along with the tax strategy, why this is going to be important, planning opportunities. Now, I'm sure you're going to say, well, is that not tax strategy? Well, kind of. Sure, there's some interplay here. But when I'm talking about planning, I'm thinking more long-term focus, because it's a double-sided coin. There are strategies that can be implemented for your end to directly have an effect on your 2025 tax bill. But there are also those planning opportunities which, hey, maybe we don't save taxes this year, but we're going to be putting away monies in a tax advantage way where we're going to be saving a lot more on taxes in the future. But before we even have that discourse, we need to know the numbers for the current year so we can more accurately give you advice about what's going to make more sense this year. Another reason we want to have good books is for tax provision. Now, not so much strategy piece, but when I'm saying provision, I'm saying, okay, how much is going to be your taxable income, right? And then based on that taxable income, what is the tax are you going to owe? And then, okay, let's back into how much is going to be due. How much have you paid through the year, right? And then once we take that all into account, your taxes due, right? Because the IRS has different payment deadlines. If you're self-employed, there's quarterly estimates that are due. If you have payroll in the picture, that's also another way to pay taxes. At the state level, are you doing it through state withholdings? Do you have a pass-through entity? Are you making PTE payments, right? These are all different considerations, but we can't accurately tell how much tax you're going to owe until we know, hey, the business income. And then moreover, if you have a spouse in the picture, their W-2, do you have passive income that's going to flow into the tax return? Those are all outside the scope of the bookkeeping, but it's going to play into this number. And the bookkeeping, if that's a massive question mark, it's going to have a huge effect on all your other income items. So we want the good books so we can give you an accurate tax provision. When you're going back through the books in these last 5 weeks before the end of the year, you're going to need to get your 1099 plan in place. If you've ever received a 1099 before, those are for contractors. The rule is now if you pay over $600 during the year you are required by law. It is not an option. It is legally required by law that you issue them a 1099. You know why? Because it has their social security number on it, and it's going to say, hey, you have to pick this up on your tax return. I care about you as the business owner. In order to kick out those 1099s, one, you need to know who you paid more than $600 to during the year. And then number two, you need to have them fill out a W-9. So when you're going back through your books, right, if you have a QuickBooks, you easily attach a vendor to any transactions, you run a report. Oh, John, I paid $500. Sam, I paid $300. Ooh, Sally, I paid her $1,000. Ooh, John 2.0, I paid him $2,000. Okay, they're going to get 1099s. In order to do that, you need this W-9. Do you have that on file? The correct practice as a business owner is to give it to them on the front end before you start using their services. But hey, you're a business owner, maybe you're not caught up on the tax game, maybe this is your first year in business, you didn't know about this. So now you got to go back and actually give them these W-9, because failure to file these forms can incur penalties from the IRS for failure to file the form or even filing late. Depending on how many vendors you have, that could be hundreds, if not thousands of dollars. So when you're going back through your books, you look at your vendors, you know, okay, I know I need to issue 5 1099s. Let me check for my W-9s. Nobody wants to pay taxes. A lot of times people are just going to ignore it or say, oh, no, I didn't see it. But then you, on the business owner, are on the hook because it was your job to collect that W-9 up. But hey, if you could substantiate, hey, I sent the W-9, I filled it out to the best of my ability, but I can't issue the 1099, it's incomplete data. And you keep these W-9s, complete or incomplete, in a folder, a filing cabinet, on your computer, whatever method works for you, but you keep it for the 2025 year. And in any event of an audit, the IRS will probably show a little bit of grace because you can show them, hey, listen, they never got back to me. I did the best I could, but I couldn't file it. And if you have that backup, they're gonna be like, all right, that's kind of on you, but kind of not. You know, you did your best. You want to protect yourself. But if the IRS comes back years later asking you for these 1099s and you never did this exercise at the end of 2025, kind of likely they're not going to abate any penalties for you. So we want our 1099 plan in place. I alluded to the next piece, right? Audit protection, and we'll get into that in a little bit. And then lastly, holidays. Really shouldn't write that up there, but I mean holidays in the sense like, okay, did you have a good year? Did you have a bad year? Do you have excess monies? Hey, tax strategy, planning opportunities, all that other stuff aside, know that a lot of people tend to spend a lot of money over the last few weeks of the year due to Christmas, New Year's, Thanksgiving, you know, all these things. So you might want to have a good idea about how much you can spend. If you have accurate books, you can tell. You know, hey, maybe I shouldn't go crazy with gifts this year, or yeah, I can't afford to take that extra trip around the holidays. I just like to throw it out there because people don't include that in their tax planning. But if you work with us, you know, there's something strategic called the Board of Advisors, and hey, maybe we are taking a holiday board meeting trip somewhere. So I like to throw holidays in there. So then on the flip side, to show you, I mean, I kind of spoke on it, but just so you have a visual. If you were to have bad books, right, inaccurate, haven't touched them since the last filing year, since 2024, you're just going to be giving yourself stress, right? Fear of an audit. You could be setting yourself up for penalties and interest by the IRS. And likely you're going to have some missed opportunities between tax savings, the long-term planning. So we'll just say, yeah, missed opportunities, right? So we don't want to be over here. We want to get our books caught up and take care of all this stuff on the right. Same simple, right? So enough of that. Let's get a clean sheet here. And now let's put some dates that we should be looking out for. So video is going up the end of November. Let's just start on a timeline with December 1st. And we're going to go all the way out to 4/15. Let's get some dates in here. Hopefully I draw this to scale. 12/15, January 1st, January 15th, January 31st. And we're going to have another deadline of 3/15 over here. Actually didn't come out too bad. So what sort of deadlines do we need to have in mind while we're cleaning up our books ahead of year end? Well, first things first, if you heard me before, I said about 90% of planning opportunities, strategy opportunities, go out the door on January 1st. We'll just say end of year. So if you just get your books up to date on 12/1, you have 31 days to not only have a meeting with a tax advisor, but then to roll out any strategies that they have for you. And hey, a lot of people take time off come the holidays. One of them being the IRS, believe it or not. Every single year, last couple weeks of the year, the IRS shuts down for maintenance, whatever that means. So if you have a small business and you've been talking potential S election, let's say, for your entity, you got to fill out some paperwork and send it to the IRS. The IRS already takes over 30 days to respond on those forms, and now you factor in they're taking 2 weeks off at the end of the year. You might not hear back on that form until February, after the year's already closed. Now, I'm not saying it's the end of the year, but hey, we kind of want to know our situation, how we're going to get taxed in the actual year. We don't want to leave it up to chance. So that's a big thing to note too. Among our other dates up here, 1/15. This is when Q4 payments are due. For my self-employed out there, you know, you have to pay estimates during the year. Those are 4/15, 6/15, 9/15, and then January 15th is the last Q4 payment. So go back to our first board. We want to have a tax provision done over here to know how much tax we're going to get assessed, how much we still going to have to pay in, and we want to make sure that's paid in by this date, whether it's taken care of through payroll in the picture, through additional withholdings, or you actually pay on irs.gov or your state. This is when your payments are going to be due, because we want to be paid in, I'll use the blue here, paid in 25 taxes. We want to be paid in by this date, because although we don't file our 1040 return until we're over on 4/15, the IRS likes their money as you earn it. That's why they require estimates in the first place. They want to take that tax money in real time as you're earning the money throughout the year. So even if you pay in by the filing deadline, you are still going to have interest and penalties potentially on underpaid tax. If you are underpaid as of this date, depending how much it is, you could be setting yourself up to pay extra interest that you didn't have to pay. And the IRS charges that compounded daily. So they're very nice on that end. So obviously, it's important to know what our taxable income is going to be, i.e. we need those accurate books, so we know we need to pay here. Enough beating that to death. January 31st, W-2s and 1099s are due. Back to that last piece on the contractors. So you need to file and issue them the form by January 31st. Failure to do so, or if you file it on February 1st, you're already setting yourself up for late filing penalties, which again, if we can take care of it, again, gather all of our W-9s back in this part of the year. If we didn't already do it, let's make sure we're gathering them, and then we can file them all by this date. You don't want to be sending them January 15th, January 20th, January 30th. You want to have these things on hand already. And then our two deadlines over here. This is for, again, my business owners. S Corps and partnership returns are due on March 15th. Or if you go on extension, you get an extra 6 months. And then over here are your individual 1040s and C Corps. So those are all the things that you have to look forward to at the end of the year. And if we could just make our lives a little bit simpler by getting our bookkeeping done, then go ahead and do that. And last piece I'll say on kind of that audit readiness. You might be skeptical, say, Andrew, I'm 40 years old, I'm self-employed, I've never been audited, nobody in my family's ever been audited. Okay, cool, yeah. I'm not saying you will, but what I am saying is if you were ever to get audited for this 2025 year, right? We're saying this is 2025, and then January 1st is 2026. Okay, that's great. Chances are you won't get your 2025 return audited on this date. Probably not. What the IRS loves doing is they're going to let you go through the whole 2026 year. They're going to let you go through 2027. And then in 2028, when you're doing this whole exercise for 2028, the IRS is going to come back and say, hey, John, we are going to audit your 2025 return. They can go 3 years back. They love doing that. They love catching you off guard. And if fraud is involved, for whatever reason, if they can substantiate that, hey, they think fraud's involved in that return, they can go back further than 3 years. So what we're always cautioning our clients on, because what advisors would we be if we didn't tell them this? I don't want you in 3 years to be scrambling to get all this documentation from 3 years ago that had you taken these, again, I say 5 weeks, but if you had taken this time, right, at the end of the year to clean up your books, I'm talking track down receipts. If you work with us, your board of advisors, your minutes for those meetings, any travel or expenses that are going through an accountable plan, right? All of these things I want to be taken care of in this time. I don't want to be doing it in 2028. Drew that in blue, but you know what I mean? You're going to forget about, they ask about some expenses you incurred in 2025. Sure, you can go back to the vendor and try and get a statement of 3 years ago of those receipts, but now you're going to be racking your brain. You're going to be making up things like, oh man, that $300 steak dinner, it was with a client, but God, what did we talk about? That's what this exercise is for at the end of the year. Again, doing it yourself or doing it through a bookkeeper. let's get a bookkeeping software. So, hey, we can upload receipts into the software. We can match it with the expense. We can write a memo. And now, 3 years later, we get audited. We don't have to do any thinking. You just go online, click on the transaction, and like, oh yeah, I do remember that. Oh, we did talk about 2025 services, how he wants to increase our scope of work, X, Y, and Z. We ate here. Great. You don't have to do that jumbling in your head and now making up stuff. We've already done the work in real time, and now audit, it's a breeze. So guys, I know that was a bit more focused on you self-employed, you business owners out there, but just want to stress the importance given the time of year. Couldn't tell, end of the year, I'm in a sweatshirt and flannel in my own house. Freaking cold in here. That time of year. But with the cold comes some bookkeeping cleanup. Let's make sure we get it done. And maybe you have some downtime around the holidays. Maybe you shut down your office, or you tell some of your customers, yeah, we're not doing anything week of Thanksgiving. You do some IRS shutdown yourself. You say, hey, no services last 2 weeks of the year. Use that downtime to get all your ducks in a row so you're ready for the future. Ready for the future, but I want you to do it as soon as possible if you're not caught up, because again, back to the first slide, we want to go to our accountant and say, hey, should I be taking more payroll, less payroll? How does my retirement picture look? Should we be maybe mega backdoor Roth this year? Is there still enough time? I'm real estate savvy, implement a short-term rental, right? All these different strategies. You can't have the conversation. You can't even sit down at the table with an advisor unless you have accurate numbers to go off. Video was kind of a rant. I apologize, but I hope you found this helpful. I hope your bookkeeping situation is in a good spot. If it's not, get over to our website, book a discovery call. We can still help you by the end of the year. Or if you have a bookkeeper yourself, just get on them and make sure it's up to date. And if you want to have any impact on your 2025 tax bill, talk to an advisor ASAP. Please like, comment on this video, subscribe to this channel, and we look forward to seeing you on the next video.